Okay, welcome everyone to another fund manager interview here on Coffee Microcaps, and I'm delighted to say we are welcoming back one of our regular interviewers and attendees at events, both online and in person. Actually, we'll upgrade him to friend of the show, friend of Coffee
Friend
Microcaps,
of the
Luke
show.
Winchester from Merewether Capital. Luke, how's things up in Newcastle?
Good, mate. Very good. Sun's shining today. It's actually well and truly coming into spring. Beautiful weather, actually. Nearly time to hit the beach, I think. But and also, look, I was just thinking this before. We've done a few of these, as you said, but it's the first one we've done with a healthy microcap market. I feel like every time
Yeah.
we've done it, it's been a little bit of a therapy session for us all. But yeah, no, I think it's starting to get pretty exciting, but still plenty of opportunities. So yeah, that's the best part for people like myself.
Yeah, we've been wading through Treacle for about 2 or 3 years, but we're, yeah, I think well and truly into bull market territory now at this stage. And the opportunities, we're going to talk about two here today. And one of them, the first one we're going to start with Ras Technology Holdings, RTH is the ticker symbol on the ASX. Some people might know it more as racing and sports because that's kind of what the brand name. But
Mhm.
one that hasn't really run. There's been a lot of stocks, you look at the 1 year performance and they're up 60, 80%. This one still hasn't really caught a bid. So maybe just give us a bit of background on what they do first, and then, what is the opportunity with RTH?
Mm. No, you're right. Look, it has sort of struggled to catch a bit. It's had a bit of a tumultuous history on the market, despite only listing back in 2021. A lot of stocks that listed in that time
Yeah.
did, to be fair. A lot came to market, probably on higher valuations than what they should. But look, so what do these guys do? For lack of a better word, it's horse racing information and back end wagering technology for bookmakers. Also, sort of focused around the horse racing offering. So. It's a real niche area, but it's a business that has a lot of characteristics that I think, certainly myself, but a lot of investors and particularly microcap investors really look for. It's been a business that's grown very strongly, pre-listing, but also since coming to market. And, after incurring a couple of years of operating losses, sort of investing into the business post IPO, now inflected back into profitability. So, a lot of things I look for, but I think you're right. One that's sort of struggled to really get that foothold in the market.
Yeah, because I was looking at their, last results, and it's their second year of, making a,
Mm.
a true NPAT profit, at the bottom. And okay, it's small, but if you kind of look at the chart in the deck, the kind of losses getting smaller profit, and then a good growth in profit. So, there's definitely
Mm.
a lot to like from it. But in terms of if we're looking out now next year and beyond. I saw they done a recent deal with the Jockey Club in Hong Kong. So, a business that's not just linked to Australia.
Yeah. And now, look, you're spot on. I mean, people who sort of follow the fund, read my monthly reports. I've written about racing and sports a couple of times, and a lot of the times when I'm talking about stocks and opportunities, that I'm sort of identifying and purchasing in the fund, there's often, a little bit of digging underneath the surface that's required. Maybe the numbers aren't quite telling the true story, and you sort of have to do a bit of work as an investor. But when I wrote about racing and sports in the last report, as I sort of said to investors, the investment thesis for this business is pretty simple. You've got a business where every operating metric, you look at the charts, are going from bottom left to top right, revenue just steadily increasing, profitability steadily increasing, and you're paying, what's a very, very fair multiple, if not just downright cheap. So, I'd love to say there's a complicated, not complicated things, but something here that I'm seeing that other people aren't. But I don't think that's the case. I speak to other people who hold the stock and sort of say, what could we be missing, or what's the market not seeing? And I think this is just one of those ones where it's a classic micro cap. It's under the radar, it's small, it's a liquid. There's only one sell side broker who covers the stock, and that's Ord Minnett, who floated them a few years ago. Um, And so it's the sort of business that goes under the radar. I think, something you touched on there as well, like, you sort of, I think it's a very, very important question to ask yourself, which is, why do you think the opportunity exists? Like, what might the rest of the market be looking at for something like this? And I think you're right. The main sort of negative point I see with people talk about racing and sports, the obvious one is, first of all, horse racing globally, it is a declining industry. There's moving parts to that. There's some places where it's declining quite fast. It's growing in some places, but net globally, it is an industry in slight decline. And the other one as well is that racing and sports historically has just been an Australian business. Pre-IPO, it certainly was. But I think that's what maybe gets lost a little bit. So when this business came to market, it was just what they refer to as their information services business, which in effect is providing, I'm simplifying this, I know, but it's in effect providing the form guide for horse racing. It's the sort of thing that for your range of bookmakers across Australia and across the world, it's the sort of thing where, can you do it internally? Yes, but it's an activity that makes a lot of sense for one party to amalgamate that data, produce it, and then sell it at a lower cost across all the individual bookmakers, rather than them all bearing that cost themselves. So it makes sense for that sort of business to be there, and it's grown quite steadily. But when they came to market, they raised some capital and invested that. There were two key areas they wanted to really grow. The first one being, they call it wagering technology, which is sort of really embedding themselves in the back end of these bookmakers and helping them flesh out a horse racing offering. Maybe touch on that in a second. But as you said, the other one was international expansion. The first one was the UK, which I really like, because you look at Australian businesses, and in particular microcaps, trying to embark on international expansion. The US is always so tough, but the UK, given the ties with Australia, there is some similarities there where you can actually make expansion work, and racing and sports have managed to do that to the point where the UK is by far the fastest growing geography, and there's a chance it could overtake Australia pretty soon, actually. And then the other one is the recent acquisition back at the first half results of some Hong Kong assets. So Hong Kong is one of the few jurisdictions around the world where horse racing is still growing quite strongly. The main reason being is that the Hong Kong Jockey Club, which basically controls that market, as you said, they've committed to really expanding the number of races that they run within Hong Kong, but also looking to effectively broaden that Hong Kong racing offering, and sort of to engage with international race holders, international bettors, and part of that, where I think it's super exciting for racing and sports, is taking the content that they've developed in around the rest of the world, translating that and providing that to Chinese bettors in Hong Kong. So they're certainly very excited about that market. There's a bit of work to be done. They bought some assets that was sort of under monetized, if that's the right word, under invested in. So that they'll put a bit of money into digitizing those assets and getting them up to speed. But it's another area where I think we'll see some pretty strong growth over the next few years.
And if we would take it back maybe to, what are you expecting from, this year? I know the, AGM will be coming up in the not too distant future. I'm not sure if they've historically, given a bit of an update at the AGM, or do we have to wait kind of until the first half rolls around?
Historically, they have given an update at the AGM, so I'm hopeful we'll see something. I think last year it was just an update on ARR, so
Okay.
probably something like that again. We may not get an EBITDA or something like that, but we'll wait and see. But nonetheless, this is a business. Family-run business. So two founders who sort of founded this a few decades ago. They still own, pretty healthy chunks of this business, about 17% each. And the son of one of those founders is currently running it. So it's that sort of family-run business. They're not out there beating their chest all the time and sort of being promotional with the market. They very much just get on with the job. So you don't see a lot of continual sort of contract announcements or customer wins. But when you do get AGM updates, half year reports, whatever, that's where you sort of get a bit of information as to, well, over the period, we won this customer, this customer, this
Mm.
customer. And as an investor, it gives you a bit of a bit of color to then go and work with. So yeah, but no, looking forward, it's a business that's historically grown around that circa 30% organically. As they sort of get bigger, I expect that percentage growth rate to slow down, but absolute to still be growing quite strong. The Hong Kong acquisition obviously comes on top as well. That was all paid out of cash, so very accretive to share to EPS as well. But I'm expecting another year of 20 to 30% top line growth. What's probably a little bit harder to model out, this business is profitable, both sort of EBITDA and right at the bottom line. But they have called out that they still are sort of building out that investment into
Still in
particularly the
growth mode.
global platform. Still in growth mode, yeah, exactly. So I don't expect all of that revenue growth to fall to the bottom line cleanly. They'll reinvest some back into the UK, into Hong Kong, and into their wagering technology business. But as we've seen, you sort of alluded to it. I mentioned it before as well. Profitability has steadily grown in line with revenue over the last few years. But this is a business, and sort of what excites me. And again, when you sort of take that step back and say, well, what might the market be overlooking here? This is a business, you probably wouldn't classify it as genuine software as a service, but it has the same economics. You are, for the information services side of the business, you're amalgamating a data set of information and you're selling that to each customer. And each customer you incrementally sell to is effectively, that sort of 85-90% gross margin. That's the same sort of economics as software. And the wagering technology, that is more of a software-like solution, but rather than being a subscription-based service, it's charged as a percentage of net win. So, they'll win a customer, and rather than getting $500,000 up front as a software as a subscription revenue, that builds over time as that customer sort of rolls out the racing offering, rolls out to different geographies, their user base, and once they get a bit of comfort, also just sort of promoting it as well. Oftentimes, as you're probably aware with bookmakers, you drive a lot of activity through your sort of promotional activity with free bets or special offers and whatnot. So there's also another thing I think gets overlooked is the embedded growth from that sort of business. That they've won some real key customers in that wagering technology, and they don't hit the ground running. It's that slow burn, that slow build, but again, the classic sort of business you love to own because they embed themselves in the DNA of these betting companies. There's a really good example, actually, if people wanted to Google it, a UK bookmaker called StakeMate, and it's relatively new. It's a newcomer comes to the industry. It's sort of trying to come along the more socialized aspect of gambling. That's sort of their edge and where they're trying to sort of embed themselves. But being UK based, their first priority was Premier League, European football, and they didn't flesh out a horse racing offering. So they went to market with a competitive tender for someone to be their full back end white label solution for horse racing, which Racing and Sports won. Now, they're a small bookmaker, so I'm not expecting that to be a material contributor to Racing and Sports. But I think strategically that was one that was pretty interesting because here you've got a newcomer to the industry with what I would assume to be a fresh sort of technology stack. Has come to market, looked at all the offerings, looked at all the competitors, and said, "No, we'll go with Racing and Sports." And they're doing the full suite. So, the full back end wagering, the customer management, promotional management, risk management, everything. So, I think they've got a really good product there, and it's one that, again, I think for a few reasons maybe flies under the radar, but I think it's a far better business than maybe what people would think at first glance. I think it pays for the sins of some of its peers as well. A few years ago, the market got very, very excited about gambling stocks on the ASX when the US was going through their deregulation. So you had the likes of BetMakers Technologies and PointsBet. really rocket and then effectively collapse back. So I think there's a lot of shareholders out there with burnt fingers and they sort of look at, oh, gambling technology, we've been there sort of thing. But I think these guys are completely different. As I said, it's a family-run business, been around for decades. They're stalwarts of the Australian horse racing industry, and I think they're doing things, especially from a growth point of view, in a much more controlled, disciplined manner, and you're starting to see the fruits of that labor come through.
Yeah. Interesting. The stake, mate, guys, as you say, got like new entrant into the wagering gambling industry that they, didn't build out their own, horse racing solution themselves. That also says something about maybe how complicated it is to do, when you're trying to cross sports. If, they're doing soccer, it wasn't
Mm.
easily be replicable on to do it now, for another sporting code, and they thought, oh, better to white label than to like go through the process of building it themselves.
100%. And I think one thing that gets misunderstood with racing and sports is, as I said before, horse racing as an industry is one in slight decline. And so the top level thinking is that, well, businesses exposed to that industry are inherently, you've got the shrinking pie, and it's going to be a tough one to be a part of. But take a step back for racing and sports. Yes, long term, of course, they're tied to the health of the horse racing industry, don't get me wrong. But more importantly for them is it's not about how many horse races there are or the turnover on those horse races. Their customers are bookmakers. And so for them, the much bigger driver of this business is, more bookmakers and more bookmakers who, want a horse racing offering. So where they've had most of their success with the wagering technology business. So, of course, the information services, it's got every blue chip bookmaker you could think of as a customer. But with wagering technology in particular, their customers are businesses like stake.com, which originally got its life as a crypto casino. Picklebet, which was originally an esports gambling business, like StakeMate, as I said before, a new entrant who sort of built themselves around social gambling and in particular soccer and European football. And so these businesses, they build up their core offering, they build up their customer base, and once you've got a few million customers on your platform and they're transacting and they're turning over and they're gambling, um, you know, it just becomes a very simple offering to be able to say, well, let's partner with someone and we'll just offer a new vertical. We'll move into sports betting, we'll move into horse racing, we'll move into, some are going the other way, we'll move into casino gaming, we'll move into whatever, and just being a more vertical provider because, again, for these wagering operators, they're platforms really. And I think it's super important to sort of understand that distinction that the core competency of a bookmaker has really changed. So, rewind 10, 20, 30 years ago, to be a bookmaker, you had to be a handicapper. You had to get
Mm.
your markets right. And, the way you made money was by handicapping the odds of these gambling markets. And now that's all been outsourced. There's third parties that provide all of that, including racing and sports. So the core competency is completely switched, where it's no longer about framing betting markets or handicapping odds. It's about customer acquisition and customer engagement, and providing the cleanest platform. And the new generations, the StakeMate as an example, purely app-based business. There's no website, no whatever. So it's super interesting to watch the evolution. And I think it's easy for people to take a top level view and say horse racing slight decline, racing and sports will struggle. But I think it's tied to a growing industry more than what maybe people would think at first glance.
Yeah, yeah, interesting one. Definitely one we keep an eye on. And the next one we want to move on to is one that should definitely be familiar to anybody who follows coffee microcaps is Motio. Adam Cadwallader, the CEO, has presented both online and in person at our conferences in Sydney over the last couple of years. And another one, despite Adam kind of getting out there and having produced, I think, pretty stellar performances given where the business was when he got involved. Also seems to kind of fly under the radar. When I talk to other investors, it's not a name that kind of comes up quite a lot, despite I think Adam being on here and the good performance. So maybe just a quick 101 on what they do, because at the end of the day, it's a pretty simple business.
It's a simple business, and I do encourage people go and watch Adam's presentations because I'll be presenting with 10% of the passion that he has for this business. It
Yeah,
oozes
no.
out of him, and it's always it's fantastic to see as an investor in a business. But more importantly, obviously, you can have passion, but he brings so much expertise to this business. He sits on the board of the Outdoor Media Association. He worked at Media for, I'll get this wrong, Adam, I'm sorry, but I think it was 15 or 20 years.
Yeah.
So he's fundamentally ingrained to the outdoor media business. So what they built at Motio, look, it was an outdoor media business before Adam got there, but it was really going through some turmoil. I think they'd already sold off the key assets they'd had prior, which was digital screens in train stations. So Adam sort of came to the business. There was maybe a bit of cash there, and the tangential shell of an outdoor media business. He brought together three or four different assets, a couple of them from Media, which he was already familiar with. And it's a really good example of the sort of business where these segments within Media would have been, lucky
Oh,
to be a percent or two of their overall
tiny.
revenue, neglected assets, but you spin them out and you give them to someone who's got the passion and the dedication to focus energy into them, and they could become something pretty special. So it's digital screens. It's that outdoor media digital screens, but in places where as they like to say, there's a bit of a higher dwell time. Place-based media. So you see them in medical centers, you see them in indoor sports centers, you see them in CBD pubs, bars, and cafes as well. So places where you go to the doctor's office and you might be sitting there for 20 minutes before your appointment. It's a really good place to whack up a digital screen when you've got sort of that captive audience. And the win-win proposition for everyone here is the venue where that screen is. They can put up some information, relative to them and help their patrons out, or provide, if you're at a pub or bar, you could whack up your menus and your happy hour deals or whatever it may be. And then the win-win for Motio is, of course, we run advertisements through that network every 30 seconds or a minute or whatever the time frame is. And so when they acquired the assets, like I said, they were a bit neglected within the broader Media business. Adam comes in. It took them a couple of years, and he's always been really good, as you said, presents the story super well, to Coffee and other places, but also writes really well in his communication to investors, and sort of made it clear that business needed a year or two of investment and sort of refreshing the network, optimizing the digital screen network, building the relationships back with their advertisers, which again was sort of, a bit neglected within New Media. But what really got me excited about this, so I'd followed it that whole time just because you could sort of see what Adam was building. But what got me across the line was the FY24 results. Made it very clear that investment phase was coming to an end, and FY25 would be a year of consolidation and really seeing the fruits of that labor. And so they originally came out at their AGM after FY24 and said, looking to do about $1 million worth of EBITDA, something like that. And then at the first half 25, they'd sort of hit that number already, had a really strong result. And so, was trading on a 7-8 mil market cap and had already done $1 million in EBITDA, strong cash flow as well. So that's when we initiated the position, and you could sort of see the momentum building. So second half FY25 was strong as well. Finished the year with another $1 million of EBITDA, and sort of ended up doing about $2 million. Growing the top line 30%, most of that organically, rolling out a few new sites, obviously, but largely driving that as revenue per location, like really hitting that utilization rate up, really resonating with national advertisers as well, where sort of working on some bigger campaigns and some bigger dollars. And Yeah, look, long story short, the fruits of that labor coming through, and valuation still remains, I think, quite cheap, trading on 4 or 5 times EBITDA, something like that. Balance sheet completely cleaned up. Um, yeah, one we've been in now for post the first half 25 results, but still very, very excited. The recent AGM update as well, things continue to grow quite strongly. I think, sort of annualizing the EBITDA run rate there, you're looking at another 20 odd percent growth to that profitability line. So it's the sort of growth, that can be pretty rare in microcaps at that sort of profitability. And when you've got a manager like Adam at the helm, it's one, yeah, we're pretty excited to own.
Oh yeah, Adam is as they say, a dyed-in-the-wool outdoor advertising media guy.
Yeah.
It definitely comes across as that. And I think that was, kind of, I remember Adam presenting at our Sydney conference back in March this year when, he after that kind of first result or whatever. And he was kind of keen, I remember from his presentation, to kind of push home the point that they don't really need to roll out more screens. They've kind of, they have quite a large universe of places now, and it's not so much about growing those. While there is potential for growth, it's not about that anymore. Now it's like really like pushing advertising kind of down through the pipes and getting, bigger deals and, really kind of leveraging the kind of network that they've put in place. And that from everything you're saying, that kind of seems to be happening. And I think that's, one of the things I look for in microcaps is the CEOs who, they say they'll do one thing and then you look back 12, 18 months later and they've executed on that. And I think, having listened to Adam, over the years, yes, it might lag by 6 months or something here or there, but by and large, the execution has kind of followed the story.
No, spot on, and you see that again. There's a great chart in the AGM, just breaking out that revenue per location. And a couple of years ago, like I said, it was about a 2 year investment period. So a couple of years ago, it was about $4,000 or $5,000 revenue per screen, and at the first quarter update for this AGM, it was over 9,000 for the first time. So pretty much doubled that revenue per location. Um, so look, I think again, like I said, with racing and sports, one of the questions I'm always sort of asking myself is, well, why does the opportunity exist? And I think with Motio, a lot of it is answered by, it's 12 mil market cap, it's illiquid. There's a lot of people who will just sort of pass on that, and that's completely fine. I think for others, may take a look at it and you can only push revenue per location so far before you sort of hit a ceiling with utilization rate. And then obviously, you're sort of growing at whatever price increases you can pass on to your advertising customers. So I think people would probably look at, well, you know, you've to your point, you've done super well growing that consolidation and that revenue per location, but now can you grow screens? Short term, yes, they've announced a deal with PCYC in New South Wales to roll out to 50 odd centres. So you'll see a nice uplift. They've called that from quarter 2 this year. But I think what I'm sort of excited about here over the medium longer term, you never know when this stuff will sort of come to fruition. But like I alluded to before, what I was really excited about that first half 25 result was that balance sheet really got cleaned up. So when they acquired some of the assets from U Media, they actually took on some vendor financing, took on a loan from U Media to buy those assets. And look, could always service that. But as you know, like in the microcap space, when you see debt on the balance sheet, it's always a bit of a concern, regardless of whatever the business is, because things can always go wrong. But they spun off a non-core asset tied to their indoor sports center business, strong cash generation from the operating business as well, to the point where they effectively paid off all that debt and were strongly net cash. So I think now what's quite exciting is that balance sheet flexibility they have, share price as well, responding quite nicely, which means I think Adam and Harley Grosser, who sits on the board with good capital markets experience, I think they've got a lot of flexibility as to how they might be able to attack the M&A side of this investment thesis now. So M&A is not something that I'm setting out to own just because of it. Like I don't want to own a
Mm,
business that, is only going to grow by acquisition. I think you can safely look across the ASX, in particular microcaps, and see that that's a strategy that very rarely ever works longer term. Um, but when you have someone like Adam at the helm with his deep industry experience, I think M&A becomes quite exciting. I think, having the flexibility where they can structure that with cash, debt, scrip, um, and sort of Adam having a bit more free reign to go out and sort of begin discussions. And there's lots of interesting assets in that outdoor media space. I know our minds straight away go to the big billboards,
mm.
in
Yeah,
CBDs,
but
but
it's more than
take
that.
Oh, keep an eye out, when you're walking around or, going to work or whatever, how many times your eyes go across, a digital screen, there's an ad flashed in front of you. There's a lot of little assets out there that I think, the team at Motio would be rubbing their hands to sort of get their hands on at the right price. So that's probably the medium longer term, but even short term, like I said, got some customers coming in. I still think that revenue per location continues. Margin still being optimized. They previously had some sort of agency style revenue where they were just sort of third party sort of pass through, which they're now sort of rolling off because that core owned business is doing so well. So yeah, another one super excited about it, and I think definitely overlooked by the market. Size, liquidity, I get that, but I think anyone who sort of scratches under the surface here will find a much better business than probably what they'd expect to see for $12 million market cap. Easily profitable, growing quite strongly. The other one as well, again, I think can sort of people can overlook it if you sort of just take a top level view, but when you look across the media spectrum, you see these stories about newspapers, legacy television, the struggles being had on that side of the advertising sector, radio as well, obviously. Outdoor media is a growing segment. I think my numbers will be out of date, but going back to the first quarter of the calendar year, I'll have to try and get the updated numbers. It was still growing at 15% a year. So, the industry, so there's big,
Mm.
big tailwinds there. And a lot of that's cannibalizing the legacy stuff I was talking about before. So growing industry, growing business. I think you have great leaders at the helm. And that valuation just, there's no other way to frame it. It's just a very undemanding valuation, 12 mil market cap. And, I think they'll do 2.5 to 3 mil EBITDA this year. So, and plenty of cash comes in behind that. Again, go back to something I said with racing and sports. I think a lot of times in microcaps, you can sort of scratch beneath the numbers a bit. So these guys have a big amortization bill from their acquisitions, which is just non-recurring. So, if you sort of that's why cash comes in much stronger than reported NPAT. So no, one we really like in the fund, and yeah, I think we'll do quite well over the coming years.
Mm. Luke, great to have you back on with us, and yeah, two interesting ones, and yeah, maybe both flying under the radar for different reasons. And yeah, just on Motio, they're one of these companies now that have decided to go early on AGMs. It seems to be a new trend on the ASX microcaps. We had a lot of AGMs in September instead of the kind of traditional November. So yeah, Motio have had their AGM, had a presentation out on the ASX as well.
Mm.
So if you're thinking Luke was confusing last year's AGM with this year's
Yeah,
AGM, he's not.
yes,
It's
true.
it's one of these ones where it was actually a trend I saw in reporting season. The annual report came out and the notice of meeting came out, and kind of everything is kind of wrapped up by like mid September. So we'll see if
Mm,
more
mm.
companies are going to continue with that trend. But yeah, have a
Yeah,
look
well, I mean,
back
there's the
at
old the old adage that good news travels fast. So,
well, yeah.
maybe it's the ones that have good updates that they want to get out there and do it as fast as possible. But no, I agree. And even through I thought you were going to say through reporting season, I noticed a lot of reports came out earlier than normal as well. I mean, as
Yeah.
microcap investors, we're used to, the 30th and the 31st
Well, I
getting
mean, reckon. I think I know it wasn't their full
yeah.
year report, so it's a slightly slimmed down, report at the half year. It's not as involved as it. But I mean, I think they were out the first week of August,
Mm, mm.
which was before anybody had ever started getting out the full year numbers. But yeah, no, that was definitely also a theme from reporting season. Just a
Yeah.
lot of microcaps were out in the second, early in the third week. Yes, it was the last week was still a crazy time, but yeah, there's definitely more of a push to get out earlier rather than later.
Yeah, and more companies should because, you're not caught in the deluge of reports
No,
and get easily lost. Sort of get the limelight to yourself when you're out in the first half of the month.
exactly. Look, we leave it there. Thank you.
Awesome. Thank you, mate. That's great.